Hello and welcome again at Stocks Advisor. Today we will talk about company Micron Technology, ticker name MU, traded at Nasdaq. It's a really huge company with more than 80 billions market capitalization. And actually, the interesting thing about this company is that it's declining already from April, with showing really a linear channel for decline. And usually it means that you could either trade within the channel, you can see it's really nicely following and bouncing upwards and downwards, or you can wait for a channel breakout, negative breakout, and then you can buy, because it means that soon the major rebounds will start, so you can trade there as well. And that's why we need to know the levels and actually be very patient here, because there is a very principal level from where the rebounds will take place. I'm not saying it's going there, it's just the level to keep in mind. And this is actually the level between, let's say, 48.69 to 52.52. Here it was formed by September, November previous year. So if for whatever sake price goes there, it's just super strong buy, really like just jump in. But it's not given we go there, because there are also other levels, and in general the channel is quite consistent. So now let's talk how we can trade here. Another important thing is that the channel now appears lower and going lower than moving average 200, the red line, meaning that there is a positive pressure being built, and this pressure is actually developing here. The bigger is the percentage difference between the moving average 200 and the current price volatility, the higher this upwards pressure. So it creates like vacuum, the pressure to suck price in upwards direction. So moving average 200 always works as an attractor. In this case, it's a positive attractor. But it's not a given that it will immediately work. Also, we see that moving averages 50 and 200 together works now as resists. And the question is, where are we now? Because if you look, we are in the middle of the channel, sitting at moving average 50, still with some positivity, because the shadow of today is going downwards, meaning it's an upwards positive pressure. But after hours volatility is a little bit, let's say, controversial. So what might be happening, we still could go to the bottom of this channel before the rebounds. And this stock, to be honest, it's not immediate trade stock. It's more like watching where it's going and slowly buying, because I think the major play here will happen later. So this is really a stock to watch the video. Remember it, remember the levels, and keep it, let's say, in mind. Keep your eye on it and check it here and then to enter at an appropriate time. So therefore, let's talk how to trade here. First of all, as I said, it would be most logical from technical point of view, expect to decline towards the channel and maybe slightly piercing it lower. So this will be the most logical first area to enter, which is between 64.93 at the bottom and 69.83 at the top. So we can write here our first call out to enter, the first technical level, so the level which is expected the most to be working as our rebound source. And if you want to know more what do we mean by those levels and why we actually discuss the levels, how we trade, what's the trading strategy and idea, please watch the explanatory video. The link will be available in the description of this video. And then you will have answers on why we discuss the levels, how we trade, etc. So this is the first technical level. And as I mentioned at the beginning of the video, what might be happening here, it could be downwards breakout of the level. And if this is going to happen, it would be, of course, momentarily very negative situation, but in general, it means that soon the major rebounds will take place, because big guys like big hedge funds, especially for a company with such a huge market capitalization, they will start looking in and entering, and this would cause actually draining out the volume and creating very strong positive pressure. And this would mean we need to be ready for the second technical level, and it's here. Clearly you can see it formed on these levels, and this was indeed formed by mid of November of previous year. So this is the level between 56.86 around. The sense could be a little bit wrong, but in general we need to know the principal levels, and 60.76, because here, if this would be the breakout downwards, we will break the declining channel. Also, we will be really far from moving average 200. It will be extremely strong positive pressure, and if we go there from technical point of view, it will be really like buy and buy. So very strong buy, and this would be the entry position, so the way to buy here. So this is the second level, second technical level. And the third level we always keep for so-called negative based risk mitigation, because negative catalyst based, risk mitigation, meaning that there is something negative could happen always on the stock market. It's a reality. For some types of stocks, it's happening more often than for others. For some types of trading sectors, it's happening more than for others. But it happens. And if it happens, and if you are not trading with stop loss, because we are not trading with stop losses, and also if you want to know why we don't trade with stop loss and what we do trade with, check the explanatory video in the link below. We do actually trade with non-linear averaging down and waiting longer and buying at the lows. So for that, you need to be ready to buy at the super low, let's call it, a very principal low. If the price just crashes there due to doomsday scenario, you will be there able to buy. So we need to keep some funds there. And the level for this is the super principal level, from where the price just cannot go lower. And as I said at the beginning of this video, this is this level formed also by autumn of previous year, will be between 48.69, and actually at the top it will be around 52, really symmetrical, nice level. So this would be the third level to buy. Let's put our call out here. And from there on, there is literally nothing that could push price lower with this major risk mitigation approach. So for there, this bounce should take place. And then the question is when to take profit. For this stock, with a, let's say, average midterm price target at least being moving average 200, meaning we could go all to 80 plus, it would be at least 10 to 15%. So the profit taking here, the most moderate will be advised from 10 to 15% from the money allocated in the position. It means that whenever you enter the lower levels, from all your money allocated, once you have 10% profit, plus you just exit. Don't hesitate. And now we need to talk how to buy through the levels, because you could say, oh yeah, you just put the levels and how we buy through. The idea is, again, if you want to know more, watch the explanatory video. The idea is that we buy non-linearly through the levels. So we buy more and more. And with this approach, the worse the situation goes, actually it's better for us, because we can be able, we will be able to acquire more stocks for cheaper price. And here the levels are such, and the situation is such that you can play with the classical 5-portion trade. For those who are not first at our channel, they know what it means. It means that the money you would like to trade here, you can split in 5 portions. Then you can buy with 1 portion through the first level. You can take another 2 portions to buy through the second level if it happens. And the third level will appear due to negative catalyst, while others will be exiting in panic. You will be just calmly buying with remaining 2 portions there, and then at a rebounds making your profit. What does it mean to buy through the level? It doesn't mean that you buy with all the portion allocated for the level immediately once the level opens. It also doesn't mean that you want to wait until the bottom of the level, because it might never happen. So the best way would be subdivide your money. Imagine like you were going to second level, and then you are ready to buy with your 2 portions. So you can subdivide these 2 portions to another 2 or 3 sub portions, and then once the level is opening, you buy with 1 sub portion. Somewhere lower, you buy with second one, and when you feel it's just about to stop going further, you buy with the third one. This way, your buying through the level would be such that you will be as close as possible to the middle. So at the rebounds, you will be able to take the most profit. And then once you have the target profit, exit. And on that moment on, analysis is over. So if you see that analysis already did play, if you see that it in old videos it did play, it happened, don't take it anymore. But if you see it did not happen yet, it's still available, then take it, and you can therefore watch also older videos. So always check it. If it played, it's done. You need a new one. So because you cannot trade with the same system all the time, you need to reevaluate each time. So be careful with this one, but that's the situation to trade with Micron technology. Definitely will be watching it. Very interesting stock. If it goes to those levels, especially to the second one, should be extremely interesting. So if you like this way of trading, as I said, with non-linear averaging down and buying more and more the lower levels, don't forget to subscribe to our channel. Press the bell button. This way you will not miss our new videos and new interesting discussions for USB stocks. With this being said, good luck with MU, and see you at another episode of Stocks Advisor channel.